the market's gapping up to last week's failure area last Wednesday. Good news, NAFTA renegotiated. Seems like there may have actually been some improvements there. It's a nice setup. Market gapping higher after a few days of kind of up and down action in about a $2.50 range. We get to see if it's actually going to start to hold towards the top of the range and break to the upside and kind of go to these X's. So the first thing people will be looking at is this 92. Below that, I would just use this little, extend this out. So those are the two spots for support. It's 292.5. Let's call it 293. This is what we open with. Assuming volatility is back down to its normal muted self, this is more than enough of a range to work with today. All right, let's take a look at IWM. Fixing my camera. All right. Okay, so same as Thursday, Friday, 169.70 to 170 resistance right here. And then I would use this 169. Obviously, it broke through there on Wednesday last week, right into the close. So that's our range. People have been getting really down on IWM recently, so we'll see. If it can hold 169 right on the open, I actually would buy some. So people are starting to get pretty negative on it. And just play for a move to here. All right, Tesla. Tesla was the big news last week, big news this week. Musk, he didn't settle, then he realized he should settle, or maybe it was part of a plan. I kind of doubt it. Let's step back. So you can see kind of all the recent negative news pieces. The big one, obviously, was he didn't settle with the SEC. It came off from right here on 308 to almost 260 at the end of the day on Friday, and just right back up where it started. Now, coming into that, before that news, the prior piece of negative news, whatever this was, I can't remember right now, was bought into the 270s and then immediately reversed, and then they accumulated it, the 290s, and then broke out on Thursday above 300 and was looking like it was going to 325 before that. So I'm operating under the assumption, unless he does something crazy in the next day or two, or if they actually release the numbers, they're going to release the numbers in the next couple of days on the Q3 in terms of production. And usually, even though it's not the official numbers, they'll say something about smoking weed with Joe Rogan. That's right, which was total bullshit. So that was definitely viable, and it did bounce from that. What's going to happen is they're going to say something about cash flow. He's been saying for the last 6 months at least that they didn't need to borrow any more money. Cash flow was going to get to positive in Q3. And if they say something like cash flow was negative, I would say greater than 100 million or 200 million, when I think would be bad. Somewhere closer than that to break even. Like, he always says things that are going to happen, and he's always off by like anywhere from a quarter to 2 quarters, sometimes a little bit longer. So if they're close to break even for Q3, I would expect it to go up to 325 or higher. But if the loss cash flow burn was greater than 200 million for the quarter, then I could see some shakiness there. If it was like 500 million, then you can put on your short caps again. And so that's just bigger picture when that announcement comes out. And in the meantime, for today, with this larger gap, what you really need to see to buy it, and first of all, I'm sure people shorted it into this last Thursday's high. That worked so far for about a 6-point down move. But basically, if they flush it on the open and it comes back up like in here, and you're just getting a consolidation for a while like this, the expectation would be that it would do that. That would be my expectation. If it flushes on the open and can't get back above, let's say 308, you could look at it on the short side. I'd just be a little bit careful until it got below 300 and started to hold. Maybe, I'd look for a move, something to down here. $295 and $290. $295 to $296. That would kind of be my downside target. I don't see it getting below 290 today. That would be too much. So this would be a stretch down here. $16 is the ATR. So 1.5 ATR is this range. And remember, you're generally risking $1.50, $2 on this one. And so any type of, if we can get a tight consolidation like around $1 or so for more than 30 minutes, that'll be a pretty good setup. General Electric. So the CEO, chairman's out, huge bounce. This could be the bottom in the stock longer term. Had just broken down last week from below 12.25. Try to bounce on Thursday. Oh, it's above 13 now. Yeah. All right. I was thinking maybe a flush back into here would be interesting. We've got your 36. It's like kind of BB in terms of has such a low ATR, but could easily have a $1 range today. Well, this would be a $1 range right here. 13.25 to 12.25. Then from a swing perspective, I think any type of closes like in this area for a few days, and then a break to the upside could be just like a swing long for a while. Okay, fails 13 first time. Let's zoom in and take a look. So it topped out here earlier at 13.16. It's holding 12.80. My first thought is to play it for like just a failure here on the open in the 13. Try to get a flush all the way down to at least 12.5, and then look to see if it starts to move higher again. I mean, I think a lot of people are going to be thinking the longer term bottom is in now, and so the question is how high are they willing to pay up? It's up $1.67 right now. It just seems too much to me, but this area here is the first reasonable spot, and then even a flush, lower would be better. I think if it got to only up 70, 80 cents on the day, that would be a spot where I'd be really aggressive, especially if 12 becomes kind of a, where it does one of these, flushes through, gets back up above, starts to hold and move sideways at $12. That could be good. AKRF, let's see if it's trading yet. It is still halted. So the idea with this is, well, first we'll look at the daily. So this deal was going to get called off. The question, I think, was whether or not the other side was going to have to pay any breakup fees. Judge ruled in their favor. So you can see here's kind of when the deal was happening, looks like, low 30s. Then gap down to 20, then gap down to 10. It was trading in the pre-market, I think at 7 or 8. And so this is a situation where you could get a flush on the open to like $6 and then a bounce all the way back up to 8 to 10. So it was below 7 when they halted it. They've done 286,000 shares. Let's see where they open it. What I put on the sheet. Yeah, there's technically no real resistance still like up here. But let's see how it opens. If it opens down near 6, I'm going to look for a bounce and then kind of see this. If it opens up here at 8, I'm going to see if it can hold the pre-market low. Kind of have no idea where it's going to open. It's going to open somewhere probably between 6 and 10. I guess if it opens below 6, that'd be really interesting. All right. Definitely worth watching today, then. We'll see once it opens. AOI, this is the one that had this second gap down in a row on Friday, putting its low right on the open at $4 or right below 4. Did go straight up. I caught this move from 24 to 25 and a half, sold most of it. The rest of the day was accumulated at 24.30. So it's gapping up this morning. I'm not sure why. But somebody lowered their price target to 36 from 54. So I guess the thinking is someone still thinks there's pretty good upside. I do think there's a pretty good chance it's going to work its way back up to 27, 28. We've talked about this one a lot the last couple of days, so I'm not going to say much more than that. This is what I think the bounce potential is. Any type of failure where it starts to hold below 24, certainly willing to look for more downside on it. BlackBerry. So BlackBerry had a crazy move on Friday. I talked about this a little bit on the weekly review on yesterday. But it came up to $11, which was the first potential failure. It actually spiked above, came back below, and then it started to hold above for a while, and then had a second leg to our second resistance from the morning game plan on Friday, and then consolidated. Anytime something goes up to a resistance level and holds up there, that means the buyers are willing to step up to that area, and if it then holds for a while and then breaks to the upside, you look for another leg. I think people did a nice job of kind of using 12 as a target. I know some people looked for a short there, which is fine. It was like 5 or 6 ATR move at that point. You just don't know if it's going to have this down move, come here, and then kind of retest the high, or consolidate here and then break and then retest the this here. In this case, it went right through. Went all the way back down to 1130. Failed at the bottom of this consolidation. And this morning is here. So the range I would be using for today is 1165, where it broke down to have the second leg down after this one, and then failed here in the mid-afternoon. And then for support, it's like 11 and a quarter, 11. So these are all the key levels, and then obviously 12. Those are the potential spots to make trades off of. GWPH. So I think it got the Morgan Stanley upgrade. I think that's why we were looking at it on Friday. And went straight down into the support from Thursday. Had a bounce. Failed at 177.5. Lower high. So this is our working resistance now. Zooming out a little bit more. 30-minute. Okay, that's better. So these are the two support areas, and then resistance is really just 177.5 to here. This is going to be a trickier stock in terms of how much it's moving. If it fails at 170, you could get a retest of this support area here. It's a big move from 140, so it could take another couple of days of consolidation, either above here or a retest here before it tries 180 again. AMRN. So AMRN broke through 15 Friday afternoon. That was a pretty big trade I think guys made on the desk. It failed there earlier in the day. Closed strong. Here's where it closed, actually. It looks like it closed here, but this was right after the close. And then this morning was up at 18. So our working range to start for today is probably here by 18. It's really kind of getting crazy, which is interesting. I was hoping we'd have some sort of blow off top in the 1920 area, and then do a retest to go back down to 16 over the next couple of days. Let's see, after hours on Friday, topped out here. So now the fact that it failed to hold above the after hours resistance means you have to look to see if sellers come into sellers step in there at 1750. And if they do, and it starts to hold below 17, you got to look for a move right back down to this area. Any type of consolidation above 17 and a half, and a break to the upside, you want to see if it can take out 18. Be careful, it's extended. Obviously, a 20% move from this breakout here it's big. It's kind of like the breakout from $12 on day 2. It had a 20% move to 14.50. So I don't think it's a coincidence that this was 20% and this is 20%. So people are thinking it's just trading on technicals, really.